Hello, everyone, and welcome back to the show. This is the Accounting Podcast, your weekly roundup of news in the accounting profession. I'm Blake Oliver.
And I'm David Leary. And Blake, summer's here, or almost here. I mean, the kids are out of
like
school,
it here.
so summer's here. Feels like it's here.
It's going to be, 99 degrees here in Scottsdale, Arizona today.
Great.
So, David, do you have a summer reading list?
I do have a summer reading list. Let me and actually, I got my summer reading list. Blake, you were in Chicago for school, so you're familiar with the Chicago Sun-Times, correct?
Yeah, we used to. I remember when we got it delivered to the door at the dorms.
Well, it's still printed, right? And it's very reputable, and they syndicate as well. So they write an article, and then it goes to newspapers all over the country. So I got to get an article from the Chicago Sun-Times, and it's my recommended reading list for 2025 summer. I'm going to share it here.
Okay.
And if you can see, it's pretty straightforward. It just lists 15 books and the authors and gives a little summary of each book I should read. Only problem is, only 5 of these 15 books are real.
Oh, no.
So this was printed in newspapers all over the country. Only 15 of these are real.
How did that get past the editors? That is so embarrassing.
Yes. So think about all the editors and layers of management, because it's not just editors at the Chicago Sun-Times. Every newspaper who chooses to buy that article or print it themselves, a version of it, they also have editors looking at this. Nobody picked up on it. Now, my favorite part of this, though, is on Amazon. This is what's great about America in general, right? So on Amazon, people started to create knockoffs of these books and instantly print them on Kindle and publish them the same week as the article. So there's a new book called The Last Algorithm. And if you look actually on the list, there's a book called The Last Algorithm by Andy Weir. Somebody made an Amazon book under Weird and Andrews. So kind of similar name, but not the same name.
Okay.
And they basically used AI to quickly write a book and put it for sale in Amazon.
That's smart. That's clever. I guess maybe they'll make some money.
But
wow.
The reason that I kind of brought this is when we start thinking about, we're going to have AI do more and more and more and more for us, right?
Yeah.
As we go forward, like the need for due diligence and review and QA work is going to be more important than ever, where you probably need to change all your workflows. But I also suspect, though, somebody's going to think that takes up too much time, and they'll try to use AI to do that part of the job too. But
well, you can. And actually the editors of the Chicago Sun-Times could have avoided this whole issue if they had used an AI agent that did a first round fact checking pass on this article, which I've created those. You can do that.
Yeah, and it could have been easy. It could have been, go get the Amazon links for all these books, and it would have came back and couldn't find any of them.
That is really funny. Actually, we could actually do that now. There's a new tool, Perplexity Labs, just came out. I want to demo it. I've got some examples of prompts that accountants could use to showcase this new feature. It's pretty impressive. But David, I don't want to cut you off. You were going to finish your thought.
I was just going to say the last thought of this is it really got me thinking. This ties back, and we'll talk about the QuickBooks price changes and the pricing of AI. But the odds of me hiring somebody who just makes shit up are kind of low. But the odds of me using AI and it making shit up is way high. Right. So when I think about the pricing, and we'll get into the QuickBooks pricing. All these apps and these companies are trying to justify charging higher prices to use AI because it's going to eliminate your employee. But there's this fundamental issue here with the quality you're going to get, a huge issue.
It actually creates more work on the review side. And we have seen that in the studies that have been done. The limited studies that have been done of AI show that it actually creates more work on the other side. So all these companies that are out there raising money to eliminate jobs, I don't know if that is really going to be what happens. You're going to eliminate part of the job, but then you're going to create more work on the other side. And I think that's what's good about AI for accountants, is that our whole job, or a good chunk of our job, is review, quality control, compliance, ensuring accuracy. And so the more AI that's out there, the more of that is necessary to ensure that what you're looking at is real. And I don't know if you saw the videos that people are creating now with Google's new AI video generator. I think it's called VO. I could
I
have that
probably
wrong.
have. It's just I don't think it was acknowledged
So-
as being the video creator, but
So we are at the point now where AI video is so good you can't tell the difference between the AI generated videos that were generated with prompts and real videos on a phone screen. Like I watch these videos on TikTok and Instagram, these demonstrations. I cannot tell the difference. You can do man on the street interviews, you can do news reports, you can do anything. Like you could recreate this show and it would be very difficult on a small screen to tell the difference. And so it has massive implications for like fake news. You can just make anything now and put it out there on the internet. So how do we trust what we see? And taking it down back to like accounting and finance, how do we trust the financials? How do investors trust what they're getting from companies? There's going to have to be a human in the loop signing off.
and this goes back to the whole argument. QuickBooks has created more work for accountants than they had before. And because
Exactly.
small business owners mess it all up. Now, if AI starts messing it all up, there's going to be even more work for accountants and bookkeepers.
That's
and
right.
people with the expertise to handle that.
Right. It
That's a good
lowers the
point.
barrier to entry for the small businesses, but somebody still needs to come in and clean it up when that business needs a loan or when they grow. So that's actually going to be great for us. Welcome to our live stream viewers. Anthony, Black Pill, Frank, great to see you all. Put a comment in the chat. We've got a new live stream comment feature where it just shows up on the right side
Oh, I
of the
see
screen, like on Twitch. So whatever you type in there goes out onto YouTube Live. So do be kind.
Some coffee emojis, please.
That's right. Well, we're getting a little started a little later, and I think maybe a good chunk of folks have already checked out of the office for summer. A lot of companies are doing that, leave at noon kind of thing. Anthony asks, is this a real show or AI? That is a good question. Are we all prompts? Who knows? Maybe we're all just, prompts inside of somebody's LLM.
Could be.
Let's
should thank
talk-
our sponsors before we jump into their news stories.
Let's do it. Who
All right.
are the sponsors for this episode?
Sponsors this week, we have Payhawk, Reframe, and Team Up. So stay tuned for ads from those three companies later in the episode.
Appreciate you. Please use the links in those ads. When you hear them, remember them, go visit those websites. That lets the sponsor know that you heard about them on our show, and it helps support us. So what are we going to talk about in this episode? David, you mentioned the QuickBooks price increases. We talked about that last time. You've got
Now
some
we have a
thoughts
week
on
of
that.
perspective. Yes.
That's right.
Talk about that.
We've got news about alternative CPA pathways. We've got a bunch of AI survey data. Excel still beats AI when it comes to the skills that hiring managers, CFOs, controllers are looking for in accountants. And I've actually got a demonstration of how AI can help you level up your Excel skills. That's probably the best use case for it. You can do incredible things now. We've got a bit of an update from Elon Musk and Doge, the PCAOB getting whacked in the big, beautiful bill. I want to talk a little bit about that. Where do we start? David, spin the wheel. Take your pick.
Did you mention Doge?
I did.
Okay.
You want to talk about Elon?
Is Doge officially dead? I know Elon's going back to Tesla. Like, is Doge dead? Did Doge accomplish anything? Like, what's the end result here?
Doge is not dead, but Elon Musk has completed his tenure as head of the Department of Government Efficiency. He had a 130-day limit as a special government employee, and that ended this month in May of 2025. What did Doge accomplish? Well, they didn't quite get to their $1 trillion in savings. They are claiming $175 billion in savings through asset sales, contract cancellations, and workforce reductions, although some observers are calling these figures inflated. So I don't know, let's say we reduce that and call it an even $100 billion. They'd accomplish 10% of their goal. And unfortunately, the original goal was actually $2 trillion. I misread that, not a trillion. So 5% of their goal seems a little bit disappointing there. Musk had to get back to his companies. He really had no choice because Tesla sales dropped something like 70% or more
Yeah,
from the
for every dollar he
previous year.
saved the U.S. government, he was losing $2 on
Yes,
his side. Yeah.
it's a lesson to business folks. Is like if you get involved in politics, there could be severe consequences for your companies. And Musk is, sadly disappointed actually because the Republicans' bill, the big beautiful bill, does not do anything to reduce the deficit. So, yes, Doge has cut government spending, but the bill actually increases government
They
spending
just figured out how to spend more. Yes.
Doge cut, and increases the deficit. And Elon Musk actually came out publicly to express disappointment with Trump's tax bill. He went on to CBS and said, that like the goal should be to reduce the deficit. Unfortunately, that's not how politics works. I feel like it was a bit naive of Musk and his supporters to think that it would. I guess you could put me in that camp. I was naive about this, but it doesn't surprise me in retrospect at all. There's like no short-term incentive to reduce the deficit. In politics, especially in the House of Representatives, is all short-term because these guys got to go up for election all the time. Now, will it survive the Senate? Will the big, beautiful bill actually make it through the Senate unscathed? I don't think so. I think it's going to have some massive changes just because of the blowback against certain provisions that people are discovering as they go through this massive bill. There's a lot in it. And some stuff that I didn't even know until this week because nobody had been talking about it. One of these is the revenge tax. Have you heard about the revenge tax, David? This is taking trade wars to another level. Section 899 is dubbed the revenge tax, and it would dramatically increase tax rates on foreign investors from countries with tax policies the U.S. deems discriminatory. So similar to those reciprocal tariffs, where if somebody in the Trump administration deems that the tariffs are not fair or the trade policies are not fair in another country, the U.S. can implement higher tariffs on those products coming into the U.S. from those countries and try to, I guess, use that as a negotiating tactic to loosen up either tariffs, lower tariffs in other countries, or the trade barriers that are not tariff-based, like restrictions on, I don't know, meat from the United States. That's a good example, right? Meat with hormones in it or something like you can't import that to Europe, right? Well, this is taking that to another level. What this would do is, well, here's an example, like that additional tax in Europe now on like social media companies. That was like last few years. That could be deemed by the Commerce Secretary a discriminatory tax on U.S. companies. And what could we do under this legislation is federal income tax rates on passive U.S. income would increase by 5 percentage points initially, then rise by another 5 points each year to a maximum of 20 points above the statutory rates. So we could it would give the executive, the president, basically the executive branch, the power to raise tax rates on individuals and corporations.
On select individuals and corporations, right?
Sovereign wealth funds, pension funds, government entities, retail investors holding U.S. assets in those countries. They could raise the tax rate up to 20% more on those people. And basically it takes that trade war and turns it into a capital war. And the big concern is we're going to drive away foreign investors. And what would that do? Well, if we're going to run a deficit every year, a bigger and bigger deficit, we need foreign investors to buy U.S. bonds, to invest in the U.S., to give us the money to do it. And so if you drive them away, what's going to happen? It's going to increase interest rates because we're going to have to pay more in interest on our debt in order to get local Americans to buy it instead, I guess. It would weaken the dollar. This just seems like a really terrible idea. I don't think that the executive should have this power. If you don't like what's happening with tariffs, you should oppose this in the bill. And it gives basically the Commerce Secretary the authority to decide what is or isn't discriminatory tax. So that's just another example of what's in the bill that we hadn't even been aware of, that a lot of people don't know about. Another industry or another group that's being hurt by the bill is the solar market. We have a $20 billion home solar market here in the US. They're already in trouble because of the tariffs on China, because a lot of those solar panels come from China. Yep. The legislation, the big beautiful bill, would strip away their tax credits. The companies that lease solar rooftop systems would lose tax credits. It would eliminate tax credits for homeowners who buy solar systems. It would repeal much of Biden's Inflation Reduction Act.
No wonder Musk is so upset. He built a whole company on that. Sunrun was built on all those subsidies and tax breaks.
And Sunrun has gotten hammered. Sunrun, their stock plummeted. It lost a third of its market value, which concerns me because I have a Sunrun system. I don't want them to go bankrupt. I need somebody to maintain that thing. There's a problem. So, yeah, that's another example. The Tax Foundation did a great example, or an op-ed, I should say. They did an op-ed about, the big problems with the bills, which we talked about in the last episode. It's the numbers just don't add up, right? $4 trillion in reduced revenues. They are only calculating a 0.6% boost to long-run GDP, which is not enough to offset the deficit increase. 1% GDP growth. They're saying that if they had created a focused business-only package, that would cost just $629 billion and deliver 1% GDP growth. So it's like we're spending a lot of money for not a lot of growth, is their criticism. And the Tax Foundation, they're nonpartisan. They just really care about like GDP, tax revenue, low taxes, right? All that stuff. The math. It just doesn't math out, really. So I don't know. I'm disappointed. I guess I'm like Musk. I'm disappointed here in where we're going as a country. AICPA is still not happy with the big beautiful bill. They sent another letter to congressional leadership complaining about the elimination of state and local tax deductibility for pass-through entities, which hurts accounting firms in blue states the most. Those partners are going to pay tens of thousands more in taxes each. It's kind of ironic, right? That I'm imagining that many of these partners are Republicans, right? Pretty leaning Republican for sure. And they're the ones getting hit hard by this.
And they're maximizing any tax strategies they can to pay less taxes.
That's right.
Take it the worst.
All right. So anyway, I don't want to talk anymore about that because we got too much else to talk about. We got to talk about tariffs. But first, let us thank our first sponsor, which is
PayHawk.
PayHawk.
Are you still drowning in month-end expense chaos? Imagine getting multiple days back each month that you're currently losing to manual accounting processes. That's why I'm excited to tell you about PayHawk, a leading spend management solution that can automate your financial processes while giving you total control and instant visibility over all your company spending. PayHawk unifies your corporate cards, expense management, accounts payable, and procurement into one single platform. The best part, it works with your existing credit cards and tracks transactions as they happen, giving you real-time insights into your spend. No more chasing receipts. PayHawk's automation handles that. No more end-of-month surprises. See exactly where your money is going in the moment it's spent. And with real-time integration to systems like NetSuite, QuickBooks, and Sage Intacct, reconciling expenses is faster than ever. Finance teams using PayHawk are saving days of work each month while gaining better cost control, real-time visibility, and the ability to focus on strategic priorities instead of expense reports. Ready to transform how your company manages spending and see how PayHawk can work for your business? Head over to accountingpodcast.promo/PayHawk. That is accountingpodcast.promo/PAYHAWK. Thank you, PayHawk.
And thank you to our live stream viewers. Hey, Jessica, Light 'em Up is here. Light 'em Up says, just got here. Did you hear about the taco trade that people on Wall Street are calling it? Trump always chickens out for tariffs.
Taco trade.
So he announces the tariffs, the markets go down, then he extends or backs off from it, and the markets go up. So if you just bet that he's going to chicken out, you'll win, which so far has seemed to work. You know, and the reason I think it works is because I have a theory about how Trump runs his presidency, which is he runs his presidency like he runs a rally. This was always his genius, too. This is why he won, because he would go around the country, he'd get huge groups of people together into stadiums, and then he would just talk, and he would listen to the crowd. And when the crowd cheered, he would say more of that. And when they booed or they didn't cheer, he would stop talking about that. And that's how he figured out what his platform was going to be. He really listened.
Yeah.
He listened to the people directly. And he doesn't do the rallies anymore. So the way that he runs his presidency is he does something, and then he watches the markets and the bond markets, the stock markets react. And then if it gets too bad, then he backs off. It's exactly the same operating philosophy.
He always wants to be liked at the end of the day. He wants the attention and adoration all the time. He doesn't have the discipline to ride out bad news for a long time. He wants the adoration.
That's one way to look at it, I suppose. All I know is that's what seems to happen. So I guess that's the taco trade, and I think it makes a lot of sense. But the thing is, in politics, I've probably said this before on the show, but I just love it so much. In politics, everything is so difficult. It's like a game of football played on the ground. So, and I know you're laughing. So you're gonna laugh at me, right? Because you're the football guy. But like, this is something Obama said when he got interviewed. It was Anthony Bourdain interviewed Barack Obama on his show in the White House cafeteria. And Obama said, politics is like football. It's a game of yards and inches. You go forward 3 yards, you go back a yard. You go forward 2 yards, you go back a yard. And so that's what I mean when I say it's like played on the ground. It's like a running game.
A running game. Got it. Okay.
Right? It's like, imagine if like, and Pat, it's like a situation where like you almost never complete a pass. So I don't know what kind of situation that is, but it's like the ball, the conditions are so bad, you can't throw the ball. It's too windy. So the way Trump is operating is like he's throwing all these Hail Marys. That's what this crazy interpretation of the law to do these tariffs is ultimately it will probably get struck down by the Supreme Court. And so it's a very risky strategy politically, because all it takes is one ruling and the whole thing falls apart and you don't make any progress, right? You go back to where you started, or worse, you turn over the ball. And so like, if you actually want to make change happen as a politician, you have to be really patient and go really slowly and go yard by yard by yard. I just love that episode. It's such a good interview. It's a great analogy.
He's just checking and see what sticks, and
right.
Not a lot sticks.
And regardless of what side you're on, whether or not you're a Democrat or Republican, that's generally how things get done. Is that like the Affordable Care Act, for instance, did not happen all at once. It was a very slow process. So if you are a Republican and you want to, improve American manufacturing, it's not going to happen with 100% tariffs all of a sudden. It's going to be a slow process that takes decades to do with continuous, concerted, unified effort by the party.
And I was thinking about that with Doge, right? Doge came around and just punched everybody in the stomach, a bunch of government divisions. They're buckled over, they're in pain, but all of them are going to stand back up and just keep on going on, because nobody has the time and the patience to make change happen over decades, to really actually change these organizations. Right. And these organizations, you talk about deep state, they existed before President Trump was around. They existed before the previous president, the previous president, previous president. And if you think Elon Musk is going to come in one day and punch people in the stomach and they're going to change their behaviors, it's not happening. Like, that's what I mean. He probably didn't accomplish anything. And historically speaking, we're going to look back in a decade and be like, Doge didn't accomplish anything.
I disagree that it didn't accomplish anything. I mean, they did cut over $100 billion of spending, probably most of it.
It'll all be back. It'll all come back.
Yes,
it's not really cut.
Without continuous effort, it will just come back because what do politicians do? They want to increase funding to their district. And so they're going to vote for the pork to come home. And if everybody does that, spending just goes up and up and up and up. There's got to be some other strategy. So let's talk about the tariffs real quick, because there was a court ruling that puts the whole thing into jeopardy. Like, this all might get struck down, or most of it. 2 federal judges this week blocked Trump's global tariffs that relied on the International Emergency Economic Powers Act, or as I like to call it, EPA. This is the Court of International Trade. And it ruled that Trump went too far in claiming fentanyl and trade deficits constituted emergencies requiring broad executive power. The law gives the president the authority in a national emergency to regulate trade, although it does not explicitly authorize tariffs. Now, an appeals court has stayed that ruling, so the Trump tariffs can continue under the International Emergency Economic Powers Act. But this is likely going to go to the Supreme Court. And my armchair legal analysis is that it will get struck down, because there's a provision in the Constitution, there's a rule that Congress cannot delegate its powers to the executive branch or to another branch of the government. And the reason that's in there is to prevent Congress from creating a dictator, right? Which has happened. And that's specifically in there to stop Congress from saying, all right, you know what? We love the president. We're just going to give the president all the authority to change all the taxes in the country forever. And we're going to not have it anymore, right? Can't do that. So it's not to say Congress can't delegate, but when they do, it has to be in a way that is like, there's like limits to it, right? And the way that President Trump used the EPA Act is basically saying that the status quo of trade deficits, which have existed for decades, is a national emergency. And if you use that logic, you could say that anything, any situation is a national emergency. And so that, I think, is what is going to ultimately get it overturned at the Supreme Court. And I know there's a lot of people who say, oh, the Supreme Court's packed with, Republican judges, but that's just not true. If you look at the way that they have ruled, Trump has actually lost more important cases in front of the Supreme Court than any president in modern times. He's got like a 35% win rate on the really important questions.
You throw Hail Marys, you only complete about a third of them. That's how it works.
Is that right? There we go. The analogy fits. So the crazy thing is all this damage is going to be done before the case actually gets decided by the Supreme Court, although who knows how quickly they might take it up. Now, there are other ways that they're looking at implementing the tariffs under other laws, but like, this is the problem when you throw those Hail Marys, right? If you get too aggressive, it could all be reset. You could go all the way. You could do a turnover. So, and some people have asked me online, well, what about Obama's tariffs? What about Biden tariffs and all that? Well, those were done under different laws that had much more established like limits. You can't just say that the president can modify tax rates on its own. Congress has that authority. It's not the president's authority. And so there has to be like very limited circumstances in which the president does that. Like the tariffs on steel, for instance, the 25% tariffs on steel, that's for national security. And you could see a judge agreeing with that because, yes, there is a very good national security reason to continue to produce steel in this country, that you need to make warships, for instance, right? So,
but a wine importer, maybe not.
Exactly, right? To correct trade deficits, I think that's on much shakier ground. So, all right, that's it for tariffs. David, I'm going to let you choose where we go next.
I want to talk about the QuickBooks price hikes, which some people called were tariffs a little bit last week. So this story broke last week, the morning of our show, so we didn't digest it very well. Now with a week of digesting it, I have some perspective on this. So just to review and recap, the QuickBooks Plus plan was $99, and now the new monthly base price is $115. And QuickBooks justified this because they're adding all these AI agents to their product. And then I saw a tweet. So there was a tweet thread about the price increases, and a CPA said this, and I quote unquote, they tagged Puzzle. Puzzle is one of these AI general ledger accounting startups. It said, at Puzzle, when can you replace QuickBooks? So I went to Puzzle's pricing page. So here's your prices for Puzzle. They have a $0 plan, they have a $50 a month plan, and they have a $100 a month plan. And the $100 a month plan is the one where they say you get automation and accuracy. So
can you get automation without accuracy?
Yes, you can get Accounting Plus, which does not offer accuracy. It's half the price. So that's $100. Then I was like, well, wonder what Digits is doing. Oh, and then I'm sorry, Puzzle has a $300 plan also, like their big plan. Then I went, well, what's Digits charging? Digits $100 a month if you want AI accounting and bookkeeping. Full service is $350 a month. It's $100 a month, right? And there's this company we'll talk about later on when I cover the prices, a company called Uplink. When I cover our app news, Uplink, their pricing page, the starter plan is $300 a month for their AI bookkeeping service. Rillet, who's more in the enterprise space, doesn't even list prices. And then this new company, Outmin, that is out of Dublin, Ireland, they just raised a bunch of money. They don't even put prices on their page, but what they do, which is interesting, they have all the features listed. And instead of saying like the features they have and the features QuickBooks has and the features Sage has, they compare it to a human bookkeeper. Right? And so where all this is going, I could argue that Intuit, they probably are just pricing up to match the other AI competitors. The AI, if you're an accountant and you think these AI GLs are going to save you money, you're 100% wrong. Actually, I think the opposite's going to be true because you can see what they're doing is they are going to price their AI functions based on you hiring a human body. So if it costs you 40 grand to hire somebody to do this bookkeeping work in your firm, these AI companies are going to price this at 20 grand. They are going to try to extract as much of that human replacement value out of you. So the AI companies aren't good. Maybe they should, maybe they shouldn't.
Well, that's what I tell accounting firms when they do pricing. If you want to get away from hourly billing and you're offering client accounting services, you're going to do the job of a bookkeeper for your client, figure out what it would cost them to go hire somebody and base your pricing off of that as a fraction of that, not on an hourly rate. You make way more per hour that way.
Yeah. So Intuit's really just coming up in price to match the market. All these AI companies are charging more than QuickBooks.
Well, and you know why they have to charge a lot is AI is really expensive. To do that kind of agent work, I mean, it's a lot of tokens.
A lot of calls.
And a lot of calls. And it has to be constant. So that's the thing about AI agents is you're not just running a single prompt. You're running prompts constantly. In order for the agent to simulate thinking like a human, you got to run these prompts constantly for every transaction that comes in. And then probably many, many more times, depending on the result of the prompt, because that's how these agents are getting smarter is they're doing research, they're thinking, they're taking notes, and then they're looking at the notes and thinking about what to do next. It's a lot of tokens going back and forth and a lot of data. And so, you know, a single transaction could cost many dollars to analyze and to code potentially. I don't know exactly what it is, but even if it's just like, let's say pennies per transaction, how many transactions does a company have, right? It adds up very quickly. And so you got to charge a lot of money for these features.
And that's the way a lot of these AI companies are doing it. They're basing it on a number of transactions. They adjust their pricing based on a transaction volume in many cases. But it goes back to the book list, right?
The summer reading list?
Yeah, the summer reading list. I can hire an employee and the odds of them not making stuff up is very low. But if I hire this AI to do my bookkeeping, right, or to be a bookkeeper in my firm, the chances of them making up data is super high. So I'm not going to want to pay more for crappier work. And that's the logic, I think, the AI companies, they think they're doing higher quality work at this point. And maybe they will eventually, but I'm not sure it can justify the prices they're charging.
Well, even if they're doing quality work, somebody still has to review it. So you can't replace the whole person. Yeah, that's exactly what you're saying, right? So you still have to hire, you either have to do it yourself or you have to hire an accountant to look at it and to
It's more
check
expensive.
it.
The reviewer is going to be even more expensive
Right.
because now they're doing the jobs of two people. The person whose job it would have done to do it right, now
Yeah.
have to review it. That's like doing the work.
Well, and one thing I learned when I started my firm was that reviewing the work can often take just as long as doing the work if you review it right. If you have the automation tools, doing the work is actually not that much time. So
I mean, yesterday I just went through this with my own QuickBooks for my S corp with my daughter. I'm behind for 2024, so she's going through the bank feed, and hey, these things don't have receipts, so I just go download all the receipts from GoDaddy, and I'm using the agent, this bill scan feature or receipt scan feature of QuickBooks. So I'm getting some benefit from AI on one side, right? It's scanning these, recording the transactions, now they're matching in the bank feeds. But then every time we open the reconciliation screen, it's off by 30 grand because all these other rando transactions are getting check marked that have nothing to do with that reconciliation period because at some other level, AI is stupid, right?
yes.
It's just,
well, the edge cases are what trips it up.
yeah. So we had to keep pausing every reconciliation to fix mistakes that AI was doing, or AI assumptions, if you want to call it that, to get the reconciliation out. But there was a little proud dad moment. Cassie started every time it would hit 0 on the reconciliation screen, the 0.00, Cassie was always pumped. She got really excited.
That's how you know she might be an accountant someday.
Yeah, it could
it's
be.
that
It could
feeling,
be.
the tie out, right? To me,
she was like, "Let's go!" every time it happened.
Yes, exactly. To me, that feeling is the drug of accounting and finance. When everything just ties out and you see that 0,
yeah,
it feels so good.
Especially when you go there.
If you
and the
agree with
AI
me, let me know in the comments.
When the AI made it seem like you're off by 20 grand, yes, it does feel good when you find it and fix it.
And the best feeling is when it ties out the first time. That's incredible. All right, let's thank our next sponsor, Reframe. Are you an accountant feeling threatened by AI, overseas outsourcing, and tech companies muscling into your territory? Here's a sobering truth. The narrative that AI and automation can replace what you do is gaining momentum, making clients question your value. But what if accounting could be seen as the most creative and innovative field in a post-AI world? Introducing Reframe 2025, the transformational conference themed Pricing with Confidence. Created by industry leader and CPA Hector Garcia and friend of the show, Reframe teaches accounting professionals to think beyond spreadsheets and reposition themselves as irreplaceable and deep-thinking human advisors. This isn't your typical accounting conference. You'll learn a new approach to confidence-based pricing strategies inspired by best-selling authors like Ron Baker and Blair Enns. Master client conversations that command premium fees, and join a supportive community of forward-thinking professionals who refuse to be replaced by algorithms. Reframe is an annual event, but it is also a permanent movement to make accounting the most human of all professions. Get your ticket before the 2025 event sells out. Head over to accountingpodcast.promo/reframe2025. That's accountingpodcast.promo/reframe2025. And now, that's a perfect lead-in to my next story, which is about Microsoft Excel. Vina Solutions did a survey of 218 finance leaders and found that Excel is still more important than AI. According to these finance teams, that's what they want. 14.7% prioritize advanced Excel knowledge as the most important skill for building a strong finance team, compared to 4.6% for AI. So Excel, more than 3 times as many responses as AI when it comes to the most important skill you need to have. Some more stats from the survey. Over half, 57% of finance teams are already using AI for operations like data entry, reconciliations, and forecasting. An additional 21% have acquired AI tools but haven't implemented them yet. So I guess if we add those numbers up, that's 77% are on the path. We're already doing it. So here's my take on this stat, right? AI cannot replace Excel because AI is statistical. These LLMs are statistical. So if you need a deterministic output, if you need to get the same answer every time,
exact, yes.
If it needs to be exact, it's got to go through something deterministic like an Excel spreadsheet with formulas. You cannot replace that with AI because AI in its current form is going to give you a slightly different answer every time. So the way we solve this, the way we improve the situation is we use AI to help us build the spreadsheets. And Perplexity Labs released like a really cool tool that can help you do this.
I'm going to pause you right there before you continue on with Perplexity. Can we just make an observation here that Excel, which people have used to create hundreds of millions of dollars of income for themselves, does not upcharge them and try to extract the value they're creating out of them, right? Or the humans you've replaced with Excel, right? You maybe have replaced a job over the 20 years with Excel. They're not trying to extract that value out of it in the same way the AI companies' plans are and the people charging for AI are.
Well, and that's been a winning strategy for Excel. That's why it became dominant. I was listening to the Technology Lab podcast, Brian Tankersley's show.
Yes.
Who does he do that with? It's with Brian Tankersley and I'm blanking right now. Sorry, apologies, guys.
I know what he looks like.
They did a great episode and all about Excel. Excel is 40 years old this year. And how did Excel beat Lotus 1-2-3? Well, they bundled it with Microsoft Office and they changed the license versus Lotus 1-2-3, where one license would let unlimited network users use it. So this was back in the day, like when you had like terminal PCs, I suppose.
Yeah.
So you buy a license of Excel and anyone in your office could use that license. And so it just took over and became dominant and has been a cash moneymaker, arguably like the reason that people buy Microsoft Office outside of Word. And it's been a success. So like that strategy of not charging ridiculous prices works in certain cases. Anyway,
it's Randy Johnson is who he does.
Randy Johnson. Apologies, Randy. Okay, so I'm a big fan of Perplexity. It's an AI app built on top of other LLMs. They have their own, but what's really cool about it is that you can use whatever model you want. So if you're looking at my screen right now on YouTube, you can see that I can select to use Perplexity's model called Sonar, or I can use Claude 4 Sonnet, or I can use GPT 4.1 or Gemini 2.5 Pro. It gives you access to all of them. Okay, you pay $20 a month for this. And so that's nice because you can basically build stuff in Perplexity, and then when the models improve, you can just choose a different model. And you don't have to rebuild it like in Claude or in ChatGPT if you want to switch things around. So Perplexity just released this feature called Labs. The last one they did was research, deep research on any topic. Super cool if you want to do like research, but Labs takes it another step. So Labs creates spreadsheets. It creates like downloadable assets. And it also, if you just click on Labs, it gives you examples of what you might want to do with it based on your previous prompts. So here's an example based on, I guess, what I've been researching. Prepare a report on unauthorized immigrant tax contributions in the U.S. for 2023, including state-by-state charts and policy analysis. So I could click that, and it would just start building that. It can also build slide decks. Here's one: build a slide deck on the ethical, security, and regulatory considerations of AI adoption in accounting with real-world examples. Here's another one: compare the security costs and compliance implications of migrating the IRS master file to the cloud versus maintaining the status quo. Include tables and diagrams. So I think that's what's different about research, is it can actually include tables, slides, diagrams, and you can download those and use those. So I'm just going to give it something really hard.
Like create a summer reading list?
No, this is even better.
15 books? Okay.
This is crazy. So build a consolidation spreadsheet for a holding company with 4 subsidiaries across different states. Create automated elimination entries for intercompany transactions, currency conversion formulas for the Canadian subsidiary, and roll-up calculations. Include pivot tables for segment reporting and automated journal entry generation for consolidation adjustments. Like, this is basically asking it to create a big workbook.
Yeah, this is a good 80 hours of work, easily.
I mean, yeah, if you knew how to do this, right? So now what's happening is that we're seeing a little timeline, and Labs is estimating that it will take 9 minutes to gather sources, compile data, and create the project. And it's walking me through its thinking. So we're actually seeing its thought process. And what this is showing us is all the prompts that are running behind the scenes based on my initial prompt. So this is all stuff that just a year or two ago, I would have had to do step by step by step in a series of dozens or even hundreds of prompts, which was extremely difficult to do. And now
essentially what it does, it figures out what it thinks it needs, and then it creates prompts to go get these things it needs, and then starts to build like layers. It's like building a layer of cakes.
And if it doesn't know what to do, because it's Perplexity and it's built on the web, and it can go and research social media, websites, academic publications, it goes out and does the research to figure out what it should do next, just like you would.
So if I created a blog site that said how to create consolidated reports, it might use my blog site. And I could be an idiot and do it wrong, and it might try to use it.
So it's still going, but just like on a cooking show, I've already done this, and so I'm gonna skip to one that's already done. So it's already complete here, and what we have under there's different tabs here, right? So what we have under labs is basically the deep research report that you would get under the deep research, the research function. So it's just like a narrative of how we should do this, explaining what we should do. How should we deal with the intercompany eliminations? How should we deal with the corporate hierarchy? The subsidiary integration methodology. It's got sections for all of this. It's thinking through it all. And what's new is this other tab called assets. So here we have all the code, the Python code that Perplexity generated that you could use if you knew how to use this. You could use this to, say, automate the creation of this in some app, but you don't have to, because it also gives you CSV files. So it gives you the worksheets that are going to go in this workbook. And you can see I've got a consolidation data CSV, I've got intercompany elimination CSV, currency rates CSV, and journal entries CSV. And then I've got a guide for how to set up the Excel workbook. So step by step, it's showing me I have to create the Excel workbook and then paste in all these CSV files. And there's 10 different sheets. We've got 4 subsidiaries here. We've got a California, Texas, New York, and Canada subsidiary. Got the currency rates, the intercompany elimination entries, journal entries. And then it tells me what formulas to use. So here's the Excel formulas that I have to implement and where to put them. Now, I haven't tried to do this, and I'm sure if we did, we would run into some issues, right? But this is a starting point. This is going to give me the framework for how I would do this sort of thing.
Well, if you could hand off these instructions to Excel, and Excel's Copilot, AI could just take all this and build the spreadsheet for you in theory.
And so that is also possible. Yeah, I think, Perplexity can't do this because Perplexity doesn't have Excel. But if you had an AI that was connected to Excel, then yeah, maybe it could actually take this information. You could download it all. And like you said, you could give it to Copilot, and then you could build that workbook. I feel like this is sort of the accounting or finance version of vibe coding that you've seen, where, I don't know if you've seen those videos online of people that are vibe coding Fortnite or Roblox. You give it a prompt and you use Cursor, the AI code editor, and it will just like set up a whole environment and all the code and create like a 3D environment that you can walk around in. And yes, it's like super basic, but it works. It's the foundation. It's like all the building blocks of what you need to actually create an app like that. And that's the sort of thing that would have taken weeks in the past to build. So it just jumpstarts you. So that's where I see accountants using AI, is to make themselves into Excel, just like not even Excel ninjas, like Excel Zen masters. I could learn how to do anything now in Excel without ever taking a course, just talking to Perplexity if I had the time. I bet you.
Going back and forth, yeah.
And same thing with QuickBooks or with some ERP system. I could figure out how to do almost anything. So really cool tool. Check out Perplexity Labs. You will not regret it. I want to try doing one more prompt while we go on to our next story so that we can see, the result.
Why don't you start typing
done.
it and then I'll read the ad while you do that.
Okay, so the prompt I want to try is something with like tax research, and I have one here. So actually, let's do this. Client onboarding checklist. Here's one. Develop a complete onboarding process for new accounting clients, including document collection checklists, initial consultation questionnaires, and timeline templates. Organize this into a professional presentation format that can be shared with new clients. And you know what? Let's change it to new tax clients. Just see what it does.
All right, so now it's working. So I'll read the ad while it's working.
Go for it.
All right. And by the way, you're not sharing. I know you're sharing. Team up. If you're a growing firm struggling to scale or turning away clients because you can't find the accounting talent you need, listen up. You probably want to hire a person, not a company. You've heard about hiring in the Philippines, but using outsourcing companies comes with endless turnover and mediocre talent. Introducing Team Up. Team Up helps accounting firms hire top Filipino talent directly. No middleman, no corporate policies getting in the way, and when you hire direct, you own the relationship completely, training them your way and building your own culture. And think about it from the accountant's perspective. They'd rather work directly with you than sit in a corporate cubicle. And these are accountants. They can do the math. They know what they're getting is a fraction of what you're paying the outsourcing company. Ready to see what hiring a person in the Philippines could cost? TeamUp just released their 2025 salary guide for accounting talent in the Philippines, and it's completely free for our listeners. You'll get current market rates for various roles, real candidate profiles, and everything you need to hire confidently. To download your free copy today, head over to accountingpodcast.promo/teamup. That is accountingpodcast.promo/TEAMUP.
Thank you, TeamUp. David, you had a story here about fundraising for a bunch of AI GLs, but now that I say that, I think we should talk about the alternative CPA pathways.
Yeah,
let's just mention this real quick, right? So 5 states, since we last talked about this, have passed legislation that offers an alternative to the 5th year of education for CPAs. Those states are
New Jersey, South Carolina, Oregon, Minnesota, and Illinois now have all. So we're getting up to, what is the total states now? 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 15, if I'm counting correctly. 15 have passed legislation, and 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. About another 10 have introduced legislation. So we've crossed like the halfway point now in states that have proposed or passed legislation to alternative pathways. And I'm still, every time we talk about this, I'm just dumbfounded how fast this happened. Post Barry.
At the ACPA?
Leaving the ICPA, exactly.
Yep. It just keeps on coming. All right, let's talk quickly about the PCAOB. That is one of those provisions in the One Beautiful Bill that is not so beautiful. I know our listeners will recall, David, I've been critical of the PCAOB in the past. I feel like they have really failed to accurately measure and report on audit quality, which makes it really hard for them to justify their continued existence, which I think is one of the reasons why.
Because audits and frauds have keep occurring since Enron.
Well, they have not been but there hasn't been another Enron.
Well, not that bad, but
so that's
we're going to judge everything. Everything is like, oh, it's not as bad as
seriously.
Enron.
I mean, well, okay, so everyone who wants to hear about this, if you care about audit and public company accounting oversight board, subscribe to the Earmark podcast. Go to podcast.earmarkcpe.com. Subscribe to it, because my next episode coming out is a panel discussion with Maureen McNichols of Stanford, Nemeth Shroff of MIT, and Daniel Aobdia of Penn State, 3 heavyweights in research on audit and the PCAOB. Nemeth and Daniel both have worked with the PCAOB. Marine previously did. They know a ton about it, and talk about what would be the implications of the PCAOB if it were to be eliminated, and the responsibilities going back to the SEC. And I am now very concerned, actually, after that conversation. And we're going to publish that very soon, so do stay tuned to it. The problem is that there's no provision for the SEC to have the funding to do what the PCAOB does. And there's all these agreements that the PCAOB has with other countries to inspect their audits, like in China, that the SEC wouldn't have. Like, there's a lot of reasons, actually, why this is a bad idea that I wasn't as aware of. So I don't understand why AICPA is not talking about this. Like, the number one concern they seem to have is about like the SALT deduction for pass-through entities, like the partners making $1 million a year who are going to have to pay a little bit more in taxes. And like, the PCAOB getting disbanded is the most world-changing event in accounting since the collapse of Enron and the establishment of the PCAOB.
I mean, is the AICPA for them getting abolished? Because the AICPA really made a big stink when the PCAOB was going to have all these new data metrics they wanted to track from firms, like hiring, who worked on the engagement, hours worked. And the AICPA really pushed back on the PCAOB. So maybe the AICPA, all these acronyms, AICPA doesn't really like PCAOB, and hence them not coming to their defense right now.
Well, it makes sense, right? If you're an auditor, it's kind of annoying to have somebody looking over your shoulder and checking your work all the time that you're accountable to. But the auditors have to be accountable to somebody. And my view is that if the business model isn't set up so that the auditors are truly independent, which it isn't, because they are hired and paid by the companies that they audit, you need to have an independent third party checking their work. If you don't, we will go back to the situation we had with Arthur Andersen, where they were just signing off on whatever Enron did, and you're going to have another massive fraud, like, inevitably. And the thing that Nemeth pointed out that's still sticking in my head is that the budget of the PCAOB is $400 million a year. The cost of any of these giant frauds is in the billions. So it's reasonable. It seems actually like reasonable insurance to have somebody doing something. Now, could the PCAOB be doing a better job? Yes. There's lots of ways they could improve, but eliminating them completely is not the solution here, in my view, based on this. So stay tuned to the Earmark podcast. You can get CPE for listening to that when it comes out. It's going to be a great episode. So thank you to Maureen McNichols for reaching out and setting that up. Now, should we talk briefly about Billy Long?
Yes.
The future IRS commissioner, if he gets through the Senate confirmation hearings?
I'm hoping you have clips. Like, he's in these hearings. Is there any public clips of him doing crazy stuff?
You know, you know what we need, David? I'm just going to put this out there. We need we need an intern for the podcast. We need somebody who can do research and go out and get clips. And guess what? AI is not there yet.
No.
I cannot give Perplexity the task of going out and finding the clips from the confirmation hearing and teeing them up for us on the podcast. So unfortunately,
better,
just talk about it.
You can make arrangements to get Billy Long to join the podcast. That would be the home run.
Well, I don't know if he will after what I have to say or the story I have to report here. So in his confirmation hearing, the senators, Senator Ron Wyden, pressed Billy Long on tribal tax credits, which he earned money promoting. So there's this thing, these tribal tax credits that are not real. The IRS has said this is false, these are fraudulent, they're non-existent. Billy Long earned $65,000 promoting them. And then when he was pressed about it in his confirmation hearing, Long said, quote, "The jury's still out," unquote, on whether these credits actually exist. That's despite the IRS saying that they're fraudulent. Long also promoted the frog-played ERTC in YouTube videos, claiming that virtually everyone qualifies, and advised viewers to ignore CPAs who said they didn't qualify. Democrats questioned whether Long would follow Trump's orders to audit specific taxpayers or remove tax-exempt status from organizations, even if illegal. And Long declined to explicitly say he would defy orders from Trump, saying only, quote, "I don't intend to let anybody direct me to start an audit for political reasons," unquote. we also talked about this on the show in the past, but I want to reiterate it because I find it to be very concerning. Immediately after Trump named him IRS commissioner, Billy Long got $165,000 in campaign donations for a campaign that he ran in 2022. He then took that money and paid himself.
Yeah.
So
that happened, and then we found some of his statements about ignoring your CPA when he was doing some of the ERC mill stuff, and then those videos and that podcast vanished off the internet. So there's a scrubbing that took place as well. Mm-hmm. And the bad thing about this is like he's going to be the pick for the IRS, and it's clearly he does not understand any taxes at all. It feels like this. He has no tax knowledge. And I'm not saying that maybe that's the requirement to lead an organization. But
well, he was an auctioneer. He was never a tax professional.
Yeah.
And yes, I agree with you, David. Like
he has that certificate, that 1 week, that financial planner certificate he took in a weekend.
It's a fake certificate. It's a fake credential. I mean, it's like made up. You did like a 2-day course. The guy's an auctioneer who ran for Congress, was in Congress for a while, and then did ERTC mill promotion stuff. Like not who you would traditionally consider to be qualified to lead the Internal Revenue Service.
Well, you're hoping you want somebody with perfect integrity running the IRS. That's the hope. That's the best for all citizens, is to have somebody,
or at least
with
knowledge,
integrity.
if not, if you can't find somebody with perfect integrity, find somebody who knows how it works. Worked inside it, worked as a tax professional. I mean, that's why Danny Werfel, wasn't he like a tax pro? That's why he was effective. So.
And speaking of podcast episodes you should tune into, I'm going to put a link to the Federal Tax Updates podcast. They actually interviewed Danny Werfel, and that episode comes out next. So I'm going to put the link in for that.
That's the Federal Tax Updates podcast. We will put the link up on the screen, and I'll read it as soon as David gets it up there because I don't remember. It's federaltaxupdates.com. That's easy. Federaltaxupdates.com. If you want to hear former Commissioner Danny Werfel on that show, which we are proud to produce, go check it out. And you can earn CPE for the Federal Tax Updates podcast as well. And many of those episodes, by the way, qualify for IRS continuing education credit through Earmark. So look for the IRS CE banner, the purple button on those courses, and you can get IRS CE credit for listening. Now, let's talk to a listener. Jason Farley. Has he been on the show before?
He was on the show a long time. If just some background, you may have, if you've listened to the show for a while, he's an accounting student who had a carpet cleaning business, and then he's pivoted now to become an accountant. And not only that, next steps, I think he's on course to be a CPA, if I remember correctly.
He is an intern at Actuate, a fully remote cloud accounting firm. He's finishing up his accounting degree at the University of Pacific, and he chose to turn down the Big Four path in favor of a tech-forward small firm. And so he is joining us today to talk about the disconnect between accounting, education, and the real world, the outsourcing crisis that's eliminating entry-level opportunities, and why he believes cloud accounting firms need to step up and invest in the next generation. Last time we had you on the program, you were talking about, what was it? It was your experience, basically, like deciding as an accounting student where to go, what to do. And you were considering going to work at EY, and you did not.
That is correct. I'm at a cloud accounting firm now, thanks to you guys.
That's amazing. It's a connection that we made through the show. And you decided to not go Big Four. You went to a small firm, tech-enabled, called Actuate. Congratulations. You've been there. How long have you been there?
A little over a year now.
Okay. And so you've been doing an internship, I understand?
So it started as an internship, and then I became an associate, and our team has grown a lot. So it's been really exciting.
And you're still finishing up your accounting degree at the University of the Pacific, and that's going to be wrapped up real soon?
That is correct. So I'll finish in December. And hopefully if California can get the 150-hour rule change pushed through this summer, I'll be able to sit for the CPA exams next year. So
awesome. So it sounds like you're pretty happy with your decision to go to a small firm versus a big one.
Incredibly. So funny enough, I started my internship at Actuate and was still planning on going to EY afterwards. But I went to EY's student leadership conference last summer, and they must have hated me because I sat there and drilled the partners and the senior managers on work-life balance, how they're using technology, how I would be enabled to grow professionally and, make decisions for myself. And I didn't get any of the answers I wanted to hear. I met a senior manager from the New York office. She has a young baby, so she takes care of her child during the day, and she's working EY all night. So she's not sleeping.
That doesn't
Um,
sound healthy.
no, not at all. And they're pushing. They have semi-remote work, right? It's a hybrid, so you have like 3 days in the office and 2 days home. But I think remote work is the future. And the firm I'm at right now, we're 100% remote. We will never have an office. And I think that's where the future is. That's what the best situation was for me and my family. And, your window to become a partner at a big four firm is like 20 years right now. But at a smaller firm, that can be much more manageable and, a much shorter time frame, which is what I want to do. So.
And Chayton, what I like about you is you've been able to form an opinion about the accounting industry as a young person. Now you're a career switcher, right? So you're a little older than maybe some of your peers, but you have an opinion. You know what you want out of the industry. You know the direction the industry should or maybe should not be going, and you're willing to take a stand on that. And I think that's amazing because most people, the funnel is this: you graduate, all the accounting programs are just funneling people into Big Four. Grind out your 8 hours a week, do what you're told. Maybe there's a promise of a partner one day, but you never went down those paths. You figured out your opinion and you stick to it, which I really like.
Well, and surprisingly, I've gotten a lot of pushback in the classroom, right? In the classroom, it's still all Big Four, go to big corporate America. I brought up zero to a few of my professors. They didn't even know what zero was. And that's crazy to me. It's crazy that our professors, the people who are bringing the next generation of accountants into the profession, are not even aware of the things that are happening in the classroom. I mean, I would listen to your guys' show and I would go and take all the news clippings that you guys go through and I would announce that to my audit class this past semester every single week, because the professors aren't telling the students what states the 150-hour rules changing in, what mergers are happening, how private equity is affecting firms. Students have no idea this stuff is even going on. And to me, that should be a critical part of, their education into the profession.
What about offshoring, outsourcing? Is that something that is being discussed in the classroom?
Not at all. And I don't think students are aware of how much outsourcing is going on as well. In my opinion, that's why wages have stagnated for entry-level accounting roles. And it's why at the cloud-based firms, it's so hard for interns to even get a job at a cloud-based firm because they're all outsourcing.
Right.
I love the cloud accounting space and all the things that these tech-forward firms are doing. But our firm is the only one I know of that's bringing on interns consistently to their small, fully remote cloud-based firm, right? Most of the bigger firms were the ones who were bearing the responsibility of bringing interns into the profession.
So that's something I've heard is a big problem at the big firms, is that if you go in as a staff accountant these days, there's so much outsourcing, so much offshoring, that it's hard to actually get real experience doing the work. I mean, is that, like, what have you heard is going on, like, at the big firms when you go to recruiters or you talk to people working at these firms? What do they say about it?
So at the Big Four, it's going to be interesting because they're actually making huge changes with AI right now. So EY and Deloitte both announced partnerships with NVIDIA earlier this year to develop their own AI platforms. And a lot of that work is going to switch to AI and away from interns. So it'll be really interesting to see if they enable interns to do higher level work or if they cut back their workforce. I think it's still, too early to tell how much that's going to happen.
Right.
But at your smaller to medium sized firms, I actually see interns and associates having a really hard time finding jobs. A lot of the work that they would do is being outsourced, and soon, in my opinion, is going to be done by AI. We're going to have a whole generation of seniors that are managing AI and managing outsourcing. But when they bump up and go to the next level, there's not going to be any seniors to take their spot because there's no training for the interns and associates. So I've posted quite a bit on LinkedIn about this, and I've gotten a lot of pushback from smaller firm owners because US interns are too expensive, or I don't want to spend the time to train an intern. I think we have to think much bigger picture, though, than just, bottom line revenue. It's got to be
Right.
about the future of the profession. If we don't train interns, there's not going to be any interns to take over cloud accounting firms in 10 years.
Because if we think about it's a craft, right? You're a craftsman, right? And you want to bring somebody as a mentor and you invest in them and train in them. But even an intern, you're going to pay some dollar an hour, but you don't have experience. And the decisions being made at firms is I'll just hire some outsourced labor that's already trained. They're way cheaper. Why do I want to invest time and effort into an intern and help them improve their craft? We're all artisans, not the right word, but craftsmen. I mean, this is a skill. It's a trade, right?
It's something that, well, call it a trade. You're going to piss some people off, David.
Okay, sorry.
But I agree, right, that there's a big aspect of our profession that's learned on the job, and that's where it is similar to a trade. And
Almost
so if you
all
don't
of it, I would say. It's very the classroom is so technical and so boring. I would tell students all the time about how excited I was about accounting, and they're like, "You're crazy! Like, this class is so boring."
Right.
And I would tell them, "Well, you got to get outside and see what it's like outside of the classroom, because if you don't, you're not going to know." And that's my argument to the profession as well, is we are causing more damage to the profession by not offering internships than the 150-hour rule is, because students think that accounting in the classroom is what accounting is like in the real world. That's not true.
Right.
You're not doing, consolidation, year-end journal entries every day at your job, but of course you have to take an exam on them. At my job, I'm getting to implement new tech. I'm using AI. I get to use Zero, and there are so many of these things that are exciting and new that Gen Z would be excited about if they knew it was going on in accounting, but they just have no idea it's even happening.
Right. Well, then what's the solution, Chayton? I mean, I understand why firm owners are outsourcing, offshoring instead of hiring interns, because it takes less time and it may be even less expensive. But they're not building up the pipeline of talent in their own firm or in the profession. So then what's the outcome? It's just that when you need to do a succession, you sell to private equity. So it's all tied together. It feels like that's ultimately where the profession is going, is where, medical went, where it's like there aren't that many doctor-owned practices anymore. The doctors work in the practices or work in the hospitals, but they're owned by non-professionals, right? By professional managers and private equity. Like, do you see any other pathway?
I think we're doing it. So we've hired 4 interns, and it's been successful with each one. I think there's a couple of solutions, and some of it's on part of the firm owners and some of it's on us students to do. I think students need to be better prepared for internships, and especially a cloud accounting internship. So students need to be learning how to use Xero, how to use OnPay, how to use Gusto, how does TaxDome and Carbon work. If they could get familiar with these things, you'd already be way more valuable than a student who doesn't know any of that day one.
And that's really something that can be improved at the education level.
Yeah, and
the colleges, universities need to teach this stuff, right?
Yeah, and I've been told that it's the student's responsibility, right? But if the students don't know this stuff exists, how can we expect them to do it?
Yeah.
So I think cloud accounting firms could get out there and talk more about what they need. Like, I don't see cloud accounting firms at career fairs. I think that'd be a great place for firm owners to go, not just to recruit, but to share the good news that accounting is bigger and better than the students think it is. I think the other thing is, if you have really good processes, if you've built out your SOPs, if your firm is running the way it really should be running, bringing on interns is not as much work as you think it is. The partner and the owner should be mentoring and helping the intern at a high level, but on the very low level stuff, they should either be able to work with a senior or another associate, or they should be independent, right? They should be able to use the resources you've developed as a firm to answer their own questions. And I don't think a lot of firms, want to go down that avenue and develop those things, but we've even seen, firms who want to sell, they're selling for much higher X's of EBITDA if they have their processes built out and if they are managing their firm the right way. So already, I think that's something that firms should be doing. And I think firm owners just need to talk to students more. If we got more cloud accounting professionals talking to students, I've been to XeroCon, Bridging the Gap. I'm going to be at several conferences this year, and I'm the only student there. Why is that the case? Why can't we have more students invited to these things and show them how exciting and how cool this stuff is?
Yeah, you were the second student I think I'd ever met at a conference in 10 years, Jaden. So all the students listening, I think that's what you should do, is go to one of these professional conferences, check it out, walk around, meet people. You could probably get a job right there and then.
And there's
Supply
nothing
and
stopping.
Yep.
There's nothing stopping you as a student from getting certified in Xero, getting certified in QuickBooks, getting certified in a payroll product like Gusto or OnPay, et cetera.
It's
There's
free.
nothing stopping you from doing those things and getting those certificates. It's not your degree, it's not your CPA, but if you have those certificates, a smaller firm might be like, hey, he knows QuickBooks. We need somebody to do QuickBooks work, and that's a way to get your foot in the door at these firms. And so that way you're presenting yourself as, I'm an intern, but I'm a valuable intern. Right.
Yeah.
Right.
Because it is a cost, right? It can be risky for firms, right? You hire an intern and they just leave to another firm, or they don't end up working out. So if students do their part and firm owners get out there and show students this exists, I think it could be really beneficial to the firms themselves and to the future of the profession.
Thanks, Chayton, for joining us. I loved talking to you, and hope to have you again on the program soon. All right, I want to go back to my Perplexity prompt, and let's see what it's doing. I have no idea if this is going to work or not. Our prompt was to develop a complete onboarding process for new tax clients, including document collection checklists, initial consultation questionnaires, and timeline templates. Organize this into a professional presentation format that can be shared with new clients. And what do we have here? We have, it looks like it created like some sort of app. Do you see this, David?
Or is that a slide?
It's like it's like a website. It's got a welcome page.
Website. Yeah, I see that.
Here's the process. So this is something you could put on a website, I guess. It's got documents. It's like a checklist kind of thing.
Oh my God!
Initial
You just built a
consultation.
portal. You built
built-
a
client timelines and deadlines,
onboarding portal.
engagement letter overview, sample engagement letter, an FAQ, contact information. Well, I'm not sure exactly what that is, but let's see what. I guess that's the app. Yeah, so it made an app.
Made that.
It made an app, and we could download the code for this app. Wow, and it's pretty neat. It's got like steps for the process. Okay, number 1, initial consultation, 60 to 90-minute meeting to understand your tax situation, 1 to 2 days. Number 2, engagement letter, review and sign engagement letter outlining our services. It's got like the whole process. Wow. Okay, let's look at the assets. So we've got the code. We've got a tax document checklist CSV file that we could import into a spreadsheet. It's got the document category, name, whether it's required or optional, and the deadline. We've got a questionnaire, a tax client initial consultation questionnaire. We've got.
Wait, keep scrolling on that. How big is that? I want like.
Oh, it's short.
Oh,
It's short.
all right.
Oh no, wait,
So it's
no,
not-
it keeps going. It keeps going. Wow, it's going. It's really going. It's giving us a comprehensive. What do you
oh
call
my
it?
God! Yeah, dude. If you
Questionnaire.
send that to your clients, you get your clients.
Well, I could ask it to make the questionnaire into to an app maybe. Here's the sample tax preparation engagement letter template that it created.
So basically, it just built a whole tax firm. Basically,
It's got a timeline, a visualization of the timeline, like a waterfall view. We've got tax season phases timeline, a visualization of that. We've got a process diagram. You know, I mean, you have to go through this and see if like any of this makes sense. But like, I mean,
but if you have
kind of view
nothing,
this-
and 20 minutes later you have this, you now have something. To iterate through and work from.
I wonder if I go back to the list, like, I guess it gives me like a checklist that I can complete. That's kind of neat. This app that it built is kind of neat. Wow. Anyway, that's the kind of stuff you can do with Perplexity Labs. All right, we've gone way over. If you are listening to this and you've gone past the 1 hour mark and you want CPE for this, please don't complain that we're only offering 1 CPE. That has happened to us. You get 1 CPE even if we go over the hour, just because we can't
Don't get
handle.
greedy. Don't get greedy.
Go back and listen to a shorter episode, or listen to any of the other podcasts on Earmark that are less than an hour if you want more CPE than that. It's free, by the way, so you know. If it was more than a 1 CPE, we'd actually have to charge you, or you'd have to subscribe, because that's the way our app is programmed. We didn't want to change that. So don't forget, you can earn free CPE for listening. Go to earmark.app, sign up for free, create your free account, get a free CPE every week. If you want to support us, subscribe for the low price of $150 a year. And David and I are going to be at a few different places in the next few weeks. I'm going to be in Atlanta at the Sage Future Conference with David. So if you are at Sage Future, if you're going to Sage Future and you hear this before then, send us an email, theaccountingpodcast@earmark.me, or better yet, mention us on social media. We'll be there as press. And we will also be at AICP Engage, at least I will. Looking forward to going to AICP Engage in Las Vegas the following week. So if you're going to be there on Tuesday.
Back-to-back conferences, back-to-back weeks.
Tuesday's the
Brutal.
best day for me to meet up. So yeah, hopefully you're there on Tuesday. Shoot me a message. Would love to connect with you all. If I haven't met you before, come say hi. That's all I got. Do we thank all our sponsors? Are we good on that, David?
Yeah, we're good on that front.
Cool.
I've just pushed these 2 other app stories I have to next week. They're not that, it's not, everybody can move on with their life without hearing these 2 stories. It's okay. We can let everybody go.
All right. So, see you all here next week, and have a great start to June. See you soon.